What's up, everyone? Welcome. It's Monday. Finally, time for another week, another trading week, and another week with the Fivers. How you guys doing? Hope you had a good weekend. And Victor, welcome, Victor. How's it going?
I'm doing fine. I am well rested, if anything. How are you doing?
Nice.
How did your week go? And perhaps even more important, how is everyone doing at home? How was your weekend?
Wait, are you saying it's more important how they did than how my weekend
Well,
was?
well, and just in numbers, you're
Yeah,
only one.
yeah,
They are, in the majority.
yeah, definitely. All right. So today, what do we have in store for you guys today? Well, today I think what we're going to look at is look ahead in the coming days of the week. See what news event do we have coming up? What setups are we watching? And I did every Sunday as I do every Sunday. I go through the markets. Didn't have time to do that this Sunday though, so I did it this morning. Monday morning, went through the markets, kind of did my regular market scan, and what I tried to do today with that market scan is basically I tried to have the perspective of I don't want to be trading, I don't want to trade, but the I want the market to convince me to take a position or to make a plan. So I had that perspective and trying to create as small of a watch list as possible. When you because sometimes you get that feeling, it's Monday, it's the beginning of the week, you get that feeling that you're ready to start trading and you really want to trade. And I feel like it's that's a dangerous mindset when you're a trader. You want to make sure that you're not your goal is not to trade. Your goal is to listen to the market and let the market tell you when it's time to take a trade. So Victor, what on that note, I wanted to ask you: Do you what kind of processes do you have when you're scanning the markets, when you're planning for the week?
Uh, I don't plan for the week, at least not on the weekends.
Right, right.
That's one
That's
thing.
that's
So
right. You go with the
yeah,
flow.
on Saturday and Sunday, I try to detach completely from the actual price action. What I do is watch my performance, and have an idea: am I doing well? Am I not doing so well? Did I miss many things? Am I trading extra signals? Right? Is it just a couple of things or a couple of trades extra, or is it really over trading? Which we always have to be mindful of. But so I don't plan the week as such. But of course, when I start the Monday morning, I do look at the panorama of what kind of week is this going to be. Is this going to be a very volatile week? Do we have a lot of news coming in, big news? And it only takes a glance to the markets, to the high impact news for this week, and you can see it from a mile apart, right? A mile afar. NFP week, we have on Wednesday, we have ADP. And although we do have a couple of bank holidays during the week, I think it's still going to be volatile, at least more than normal, because just of NFP. And that's what I have. And I only know that these weeks I need to be careful not to get triggered by anything, because with volatility comes the opportunity, or the chances that the market will shake us in one side and then go the other direction. And so you have to be prepared. But I wouldn't say that's more mentally. It's not price action necessarily. So that's what I do before I hit the charts. You're muted.
And when you actually go into yes, thank you. When you actually go into the charts and you start looking for setups, what you're not looking at a big number of pairs, right? If I'm not
No.
mistaken, you're looking at EU and GU. Is there anything else you're looking at?
That's it. I try to keep it as simple as possible. We talk about this. It's so tempting to think the more that doing more is better, My experience doesn't tell me that. I know that other people watch at different pairs, and that all power to them. If that works for them, by all means, don't let me stop you. But for me, I know that I need to limit myself to a couple of pairs. Maybe I will change in the future, but right now, in the last couple of years, it has done me well by focusing on just two, and I can do a little extra, but nothing more than I shouldn't get too fancy and try to do all kind of all kinds of pairs. So it's only two pairs, um, and that's it. And I try to make it simple, right? I talk a lot about mechanical systems, rule based system, and my approach to the new week is not different. It's I do the same thing every day, every Monday, every Tuesday. I do the same thing, and to me, that's the key for consistency. My process needs to be consistent. If I want my performance to be consistent, right? So, and that's what I do. I just look at the top down of the markets, see if they are able to give me a signal, and I go from the monthly all the way to the H4, and if it doesn't, I move on. I do something else. I try not to force the market.
Yeah, that makes sense. So you're not looking at the DXY, the Dixie, the US dollar currency strength, the currency index. You're not
No.
looking at the S&P 500, nothing like that. You're just looking at your two GU and EU.
Yes, I am. You could build a system, right? Having another pair being an indicator. It can be the fix, right? Looking at the volatility. It can be, depending if you're trading the equities market, of course. And you could be using that, and that's fine. I don't say you shouldn't do that, but I haven't found any of those, at least not yet. I'm not using any of those tools in my system, and it's working fine. And as they say, if it's not broken, don't fix it.
Exactly, that's right. So, guys, we have an exciting announcement as well. So, first of all, if you do have any questions, anything you need help with in your trading, let us know in the comments. We will select those comments and then try to help you out. So, anything that you feel could be helpful, if we answer your questions, help you out, let us know in the comments. Anything is welcome. Then after the first hour, we'll have a short break, and then after that break, we'll go through a couple of video audition submissions for the one for all challenge, which is so let me explain what we got going on, right? So we have a Discord server, okay? That Discord server available for all the members of the 5ers who have an evaluation account, or if you're funded, you'll gain access to that Discord server by going into your. I believe it's you go into the hub, and then you click on one of your programs, and then you have a link to join a Discord. And within Discord, we have something very cool going on here. So we have this all for one challenge, right? Where we're going to have multiple teams of traders, multiple teams within the Discord that will have one account. Now, I can't remember the exact numbers, but I believe that they'll have 2 weeks to get to, is it 10% profit? I think it's 10% profit or 5% profit in 2 weeks, but they have a specific milestone to reach. So we're going to have members of the 5ers, traders. They'll have one team leader, and then they'll have people in the team, and they'll be trading this one account together with the goal of reaching that milestone. And we have video auditions for people that are ready to maybe be a team leader or trade for their team to trade that account. So we're going to be watching a couple of those video submissions here in the live stream after the break. So it's really cool, really cool. I'm super proud to have these people make these auditions, because it's just regular people. It's regular people who's never been on YouTube before. It's just and they're ready to record a quick video for us to show here on the live stream. So when we actually do, I want you guys to be nice. Remember that most of you watching this probably wouldn't get to that level where you're able to feel comfortable, uploading a video and having, hundreds of people, and in this case, thousands of people watching that video. So when we do go through those video reviews, remember, guys, be nice. It's not easy. So that's gonna be very fun to go through. We have a question right here. Do you have Let's see. Do you have a routine for selecting pairs to trade during each session of your trading? Yeah. So I wanted to go through. First, what I wanted to do is I wanted to just go through the news here. So you see that on. Okay, sorry. Yeah. So Monday we got Fed Chair Powell speaking this evening. And then we have tomorrow, we have the core CPI, the flash CPI for Euro. Then we got JOLTS job opening for the US. That's going to be a big one. But then, of course, the biggest news event of the week is happening on Friday with the. That's not NFP, is it? That's non-farm employment change. But that's not NFP.
That is an NFP.
But it's an NFP non-farm payroll. Oh, it's they changed the word, because in the past it was non-farm payroll.
Well, it's the same. I think they I don't know why it looks differently, but that is NFP, non-farm payroll or employment change. I don't know if when they changed it, but that's still NFP. It's the first Friday.
Yeah, they changed the name actually. They actually did change the name, because I'm going back and looking at old dates, and in the past it was actually non-farm payroll, and now they have changed it to non-farm employment change, which kind of makes more sense actually. So that's the NFP. That's the NFP right there, and it should be the first Friday of the month. Yeah, so it's. Yeah, exactly. So release monthly, first Friday of the month. So that's going to be a big one. Okay, so let me just go through. Yeah, exactly, Henry. It's now it's NFEC as the NFEC. Okay, so let me go through the process. Just give me a second. I gotta answer a message. Okay, so the whole process that I have when I'm going through the markets on a weekly basis is this, right? So I have my list of, let's see how many pairs it actually is. How can I see how many pairs do we have in this one right here? Well, I'm not going to count them. Never mind. But it's about 40 different pairs. So now you can see that I have different segments right here with the watch list. So I have one which is called open trades / orders. So if I have orders set, basically, if I have an open position or if I have limit orders set for a possible trade, then I move that up into that first list right there. And then you can see the second list, or the second section here, is called priority, scanned priority. This means that I've done my weekly scanning and I've scanned these, and it's a priority because there could be a setup forming in the next couple of days, today, in the next candle, or in the next couple of days, basically this week. So these are the most important, most interesting pairs that I have for this week, and I move them to this list. And then I have one which is called scanned interesting. So these are the ones that are scanned, and I find them interesting for various reasons. There might be a trade setup potentially forming maybe at the end of the week or next week, but there's something about the chart that makes me interested in it. So I'll add alerts, I'll add a level, and make plans. So this one, for example, Euro AUD. I'm looking for, this is on the daily. I'm looking for a possible move down to that level right here. And down here, I want to see a 4-hour market structure forming. If price would be down here, then that would make this a priority. So basically, the priority list is more of if I'm in the area of interest, if I'm in the area where I would want to take a trade, then I would move it to priority. But right now it's interesting because I know that if price moves down here or maybe moves like this, there is a possible trade. And if that happens, I'll move that to the priority list. And then below I have a list which is called no interest. And basically here I have all the pairs that I'm just not seeing anything obvious. Price action is not super obvious, you know. If I can't see anything right away, then I move this to no interest. Now, gold, for example, is interesting. I mean, this might actually, I'm going to move that to interesting because you can see on gold that we can see levels where there's going to be a setup. And on gold, that's going to be down here. Okay. So this, I move this to interesting, and then I have an alert right here, which will alert me when price comes closer to that level. And then when price actually hits that level, I'm looking for a 4-hour reversal, just like we have up here, where we have a low, high, and then we have something like this. So what we're seeing now on gold is we're seeing a potential reversal pattern on the 4-hour. So if gold would be trading at a high time frame level, which you know, it's not because it's at all-time highs, I believe, then if this was a historical high time frame level, then I would short this, and the trade would most likely, on the close of this candle, I would put entry orders on that one, and then stops will go all the way up here below the very high of the pattern that created the entry trigger. And then I would TP here at 0.53R, which aligns quite nicely with this area here. So that would be the trade on gold. So what I'm looking for is this exact pattern, but down here, because this is a daily high time frame level. So I'm looking for price to come down into this level right here. And, you know, it's gonna look like a downtrend. It's probably gonna look like this, you know, and then it comes down here, and it forms something like this, and then it starts moving higher. This is, you know, a good example of a short I would take if this would be a high time frame level. But then again, I don't want to be shorting against the high time frame trend. So if you look at the daily, what we're doing here is we're shorting resistance, but in a massive daily uptrend. So if I had to choose here, I would not short this because it's a daily uptrend, but I would long a 4-hour breakup structure down in that level. So that's what I'm looking for when I'm scanning the markets. And the way I scan the markets is it takes me between 10 and 20 minutes to go through all of these 40 pairs, and I do it all on the daily. So I can look at your NCD here, for example. I add a horizontal support right here, and basically what I'm seeing is, okay, if price comes down here, I want to long. So I know that price comes down here, I'm going to look for breakup structure on 4-hour, and then I move on to the next one. And here, NCD JPY, it's at resistance, but I don't really like this. I think it has bullish characteristics here. So what I want to do is I want to wait for a breakout and then go long when the daily comes back down for a retest and a breakup structure on the 4-hour. And it's this simple. And now I have a level down here, looking for a move down to this daily level and a breakup structure on the 4-hour. And same thing here with CAD JPY. Now, CAD JPY is actually printing something which I quite like. It's coming down. Now, I don't usually add the fibs when trading this way, but if you add the fibs, you'll see that CAD JPY has come down beautifully, hit the 0.618 here. It's a good break and retest on the daily. So what I'm looking for here on the 4-hour is a good bullish confirmation right here. So what I want to see here is a break above like this level right here. If this candle, for example, if this candle on the 4-hour is going to close up here as a strong bullish thrust candle above, I will trade this like this as a breakup structure trade. And the reason why I don't have to get the perfect structure on the 4 hour is I know that looking at this on the 4 hour. Now I never look at the 1 hour, but we can all agree that this is obviously a double bottom on the 1 hour. I think everyone who looks at this and knows price action knows that now that I'm going to go into the 1 hour, it's most likely going to be a W formation on the 1 hour, and that's exactly what you have right here, because you can see here on the 4 hour, you have one low with a wick, and then one low with a wick, and a up candle and a down candle. And if you connect this, it creates a W, which will be more visible the lower you go into time frames. So on the 5 minute, on the 15 minutes, it's going to be just a more clearer picture. But on the 1 hour, it's just perfect. So here, what we're looking at is it move down, and here we have the potential breakup structure. And it's this move that I want. When we get the 4 hour candle like this, the breakup move, that's when I enter long orders on the retest of that W neckline, and then use this 0.53 R trade, just like that. So that's why CAD JPY is in the zone or in the priority list, because I believe that we're going to have a setup on this forming very, very soon, I think. Victor, anything you're looking at?
Well, what I'm looking at, let me show my my charts. I'm just looking at the. I had a setup. That is my chart right there. I had a setup this morning, but what I was looking right now was the higher time frame, because what does the price action, if you go to the higher time frames, what is it telling us? One of the things you can see is if we go to higher time frames, we are supposed to be, not we're supposed, we are in a bearish structure on the daily, right? And it looks like if it's going to be, that's supposed to be a supply zone. If price is going to be reacting from that order block, which normally it does. But what is the price action telling us as it is, reaching and interacting with this order block, right? It did form a bearish order block. If you consider this to be that price action right there to be a formation of a order block, which I do. But one of the tasks that I apply to price action all the time is, does it have follow through? Because if what you say is going to be true or is true, it needs to act a certain way. It needs to have follow through, right? If it's just one incident, one thing it does that rhymes with the scenario you are envisioning for price, then it's just one information, one of many. And what this is telling me right now is that it is not it is not having follow through. By that I mean, I'm going to change this to a better color to be seeing, something more, stands out a little bit more. But if this is going to be and my idea is this, if this is going to be an area where price will be reversing from that daily order block, then it should create a bearish order block, and it did. Up to this point, it's following the script, right? It closed bearish and it comes back, and the coming back is okay. I would say is, coming back to that order block. So far it would have been okay up to that point, right? To this level, more or less, because that's the retest of that new bearish fresh order block that was created. But from that point, it stopped following the script completely. And to me, that is telling me something. It is telling me that, it's not having follow through. And the more bars we're having, the stronger that off the script, price action is getting. The louder it's telling me that it is not responding to that supply zone. So we should not fight against price action. What it's telling us, we should join it, right? So and identify it and join it. In this case, so although this is a bearish order block, and normally, given the right circumstances, I'm going to be looking for a short here. This time around, I'm not, because I try to be as close to price action as possible. So I look at the recent price action and see if it has follow through. And this time around, it isn't. Maybe it can still switch in the future, like today or tomorrow. But as of now, it's not doing what it's supposed to be doing, as in bearishness. So if that is the case, then we should not be looking for a bearish, but a bullish move, because I know it is congested and a bit difficult to see, but this at the same time we have a bearish structure here, which could be the basis of a bearish setup. We also have bullishness coming in from the same candle, right? That's the candle that I indicated. This candle was the last one that was following the bearish script, but it's also the first candle that starts, actually the next one is the first candle that starts the bullish narrative, right? The bullish narrative being that it formed a bullish order block, goes back to retest it, and what does it do? Does it have follow through to the bullish side? Yes, it does. See that? It's no longer being able to make, if we go deeper, right? Just looking at the next lows, right? Doesn't break that low. This one does break it, but only to take liquidity, right? And it ends up going way up. So that's not even bearish. That's bullish. So to me, it is forming. It's showing us that it wants to, continue. This breakout is to be continued. This isn't over. The other thing is on the weekly, it hasn't formed any bearish structures. That's another sign. It's not, that whatever that I saw on the daily bearishness, it doesn't have multiple time frames telling me the same. And this is even more interesting. Or we have a today is the 30th, the last day of the month. What are the chances that today it's still going to close below and within, not below, but within that bearish monthly order block? Not very likely. I mean, it can happen. Let's measure it. How much is it? It needs to drop about 49 pips out of, I think today, let's see what today has done. It will have to drop. That's about 69. That's basically the daily ATR. So it'll have to close below and beyond the daily, the D1 ATR, for it to not invalidate that monthly order block. So it's most likely to invalidate that. So we can foresee that it's going to confirm a invalidation of a monthly bearish order block, which means it just, I mean, we saw this coming, but now it's going to be a fact. It's going to invalidate it. And the most likely place it's going to continue is to the upside based on the monthly. The weekly isn't telling us anything different, and the daily, the bearish structure isn't getting follow through. So to me, the higher time frames are telling us that it's going to likely continue higher. And if I use the different ways that I have to project the possible target for this move based on the order block, that big one order block here, it would be above the previous high. But since we have a previous high there, I don't want to be, let me mark this. I don't want to be, overreaching. I want to have a high probability target, which is just that high or slightly above that. And so I think that's, but I don't have a setup yet. I did have one this morning, but I don't have a setup for the higher time frames. So that's what I've been looking for, and it's very similar on GU as well, since I trade both of them. Although I have to admit that GU is still within that bearish order block that it has formed in the past, so it looks less bullish in that sense. But everything else does tell us that it's the market structure is very nicely very bullish, and I think it's likely to be heading for that next structure on the monthly order block, which is, what is it, about 40 pips from the high of Thursday, I'm sorry, Thursday, and about I would say something, what is it, from current prices? Let's see, that's about 80, 90 pips from that. So we'll have to see. I think it's I don't have an idea if it's going to just continue with all the retrace or not, but it will eventually end up higher. I think EU is telling us for sure that, and GU isn't that clear, but I think it's going to be the same for the couple of the next few sessions. All right, so
Yeah, I have a question for you. I'm not sure if you've
go ahead.
answered this one, but how many candles you consider as follow through?
I don't have like a strict rule for that. What I need to see is follow through. To me is there is a pattern, right, in order flow, and the pattern is, I read everything into every formation of bullish order block, that be a outside bar or a bullish order block. I mean, and engulfing. I'm sorry. Those are the signs that I consider bullish, right? And if they or bearish, if they form the other way, and it needs to be giving me the same side, the same signals, the same side. So it needs to be forming bullish, and once in a while it can form something bearish, but it needs to go back and form a bullish again. That's the pattern that I keep looking. So it needs to give me this. If it's going to go up, it's likely to go form a bullish order block, come back, retrace into it, retest it, and move out, form another bullish order block, right? That sequence of bullish sign, another bullish sign. When you keep doing that and it's doing the majorly a bullish, then I consider that it's follow through to the first order block. I will tell you, I will form you, I'll show this maybe with an idea here.
I
If I
think
see,
yeah. Before you showed, I think I think that question was more directed to for me, for example, I look at a breakout as and not only do you want to have a daily close above the level, but I want to have an open and close above the level. But you're looking at it in a different way because you're obviously not trading breakouts and things like that. So
Mhm.
I guess here's another question on the same subject. um, Candle closes you need as confirmation for follow through. So you're not really looking for candle closes because you're not trading breakouts like that.
Yes, I'm not. Of course, the candle close does mean something because it's a confirmation of an actual structure. If I see the structure, but it's not, let's say on the monthly, we have been seeing, how the monthly has been squeezing and has been being outside, squeezing that monthly order block, that bearish one. That to me is a bearish sign, but it's follow through is in this case would be the close because it invalidates the monthly, but it doesn't have to be. It's not about the close, it's about the creation and invalidation of the order blocks, which are the structures by which I interpret what the market wants to do. So in this case we have a bearish order block on the monthly. As long as it doesn't break it, right, the expected move from this is for market to come back to it. Let me get this right. It forms that. Let me get the price action that created this order block. Right, it goes up and it creates that order block, and we see how it moves out. And to me, the fact that it comes back to this order block, the script to follow would be for price to continue lower. And the fact that it's not doing that by closing at the end of this day, at the end of this month, which is likely to happen tonight, close here, right? It's telling me something. That's a sign. That's a signal. Not a signal to enter a trade, but a signal for who is in control. And it has to, the next signal it gives me should rhyme with this signal. If the next signal is the same, if the same direction, then to me it is having follow through. And it's not about the close necessarily. So on the monthly, of course, you don't get that many information, but um, well, the information I get here is these are the following information, right? I try to minimize them. What do I see here? I see a bearish order block and it moves out, right? It's it's supposed to give me another bearish order block. And what does it do? It gives me a bullish one. That's none following through. That means when it's not following through. right? If it was supposed to follow through, it should have, come back and give me another bearish order block anywhere. And it's not doing that. And what does it do here? It forms a bullish one, right? Comes back, and it does something that I consider to be follow through as well. It comes back to that order block. What does it do? Because it's a bullish order block, the expected move is that it responds to it. So the order block reverses price to go up, and it does that. So it gives a one, it forms the bullish order block, and it reacts as it's supposed to that. So those are two signs telling me that the market is having follow through in terms of bullishness. It's not just giving me one sign, but it has a second sign, maybe a third sign. That to me is that's how I read what the market wants to do. And this one goes, so we have one bullish order block coming retesting it successfully by moving outside of the order block, and then tonight it will break a bearish structure. That's follow through as well. So it's bullishness, and the third one tonight will be bullishness again. So that's what I mean by having follow through. So it's not necessarily like the closes. It's about if the market is doing is following the bullish script, right? And the bullish script to me is reacting to a retesting successfully, for example, a bullish structure. It's by forming bullish candlestick combinations. It's by having bigger moves to the upside than it is bigger impulses to one side, to the bullishness in this case, than it is when it retraces, right? How, for example, here we can read another thing here. If we consider these candles, right? This one is quite big, right? But if you consider these four candles, let me take that away. Let me get the bigger arrow, right? If we consider these four, right? What do we notice? Okay, the first one is big. The middle two are kind of indecision candle, and the fourth one is big as well. But how do they, as a whole, compare to these two candles? Right, all of them are quite big to me. So if when I compare this, I consider then that this is the impulsive move, and this is the retrace, right? And as long as if that is true, then the next impulsive move should be to the upside. And you can see that that's exactly the case. Not necessarily here because it was going sideways, but the next impulsive move was indeed to the upside. So it's following the same script: bullishness to me. So that's follow through. It needs to be doing the same thing. As long as it's doing that, I want to be bullish on whatever time frame it's showing me. I hope that explains it.
Yeah, that explains it well. So you're not looking at specific, closing of candles. You're basically looking at a down move, and then you're asking, is there continuation of this down move? Do we see follow through of this move to the downside, or is the bulls going to come in? So I mean, it makes perfect sense. You have a down move, and then if you hit support, you want to see, do we have follow through of sellers coming in, or do we have buyers stepping in here? And usually from my experiences, you'll have like a bullish engulfing candle at that support, and that obviously shows you that there's no follow through, and that's exactly what you had as well, that bullish candle. I had a question. Yes, we had someone wanted to look at euro NCD, so I'm going to look at euro NCD, and then Victor, maybe I think you might want to look at gold, if that's okay.
Sure.
Okay, so we got euro NCD here. It's at the very top of my list. So I have two things that I'm potentially looking for on euro NCD. Well, actually, when you look at euro NCD, you might be tempted to look for potential shorts on the 4 hour. So on the daily, what I'm seeing here is, obviously we can go to the weekly, and I think the weekly is quite clear as well. Now I'm going to remove these alert lines. That's a bit simpler to see, and I think I can remove this as well. But on the weekly, what I want to see for Euro NCD is I want this current level that we're trading at. I want price to not go any further. I want to see continuation to the downside, because the lower we go into this support zone, the more confident I feel of going long. You know, when we're trading and we only had a bounce here, I feel like there's a lot of space below that might get retested, might get filled. So I want to see price come lower, you know, and down here is where I want to see that 4-hour breakup structure. Looking at Euro NCD here, we might have a reason to go short, because you can look at price action here, and you can say you have sort of a resistance level right here, and we're testing that resistance right now. So if you're looking at this and you say, I want to short this, I think it's very important to take into consideration the fact that you have this 4-hour candle right here, very strong bullish engulfing candle right there. Also looks like it's a massive outside bar as well. Not only does it engulf that one, it takes out the previous 2 bars as well. It's a very strong candle right here. Yes, we're coming up into resistance, but it's actually also the second retest. So you can see right here we have the first retest. That's usually the retest that I want to short. If I would be trading on the 1 hour, I would be taking that short and not this one, because now we're testing the level for the second time and we're actually trading above that level right here. So even though Euro NCD might look interesting to take to the downside, I'm actually more interested in seeing a potential long on a retest of this level, because if we come up here, maybe hit, you know, this high right here as resistance, we might want to come down and retest that level. And if we have confirmation of a bounce, we have a potential break of structure on the 4-hour. And not only do we have a potential break of structure on the 4-hour, we also go back to the daily and we see that that break of structure is coming from a move of this level right here, a level that has not been tested since July. So you had a very good bounce here, strong, very violent move to the upside. So this, obviously, the buyers that stepped in here pushed price and started the run to the upside, a big move to the upside. And we're coming down, we're testing that level once again. And if the move from that level can cause a break of structure, I'm looking to go long. To be extra safe, I might want to see a reclaim of this level. So we have a real break of structure that looks like this. But I'm definitely biased to the long side. But the best possible scenario for me is for price to go back here, come back down like this, and then start forming something like this. We have that double bottom on the 4-hour, because that would then create that bottom formation that I'm looking for. Victor, I would like to actually see your analysis on Euro NCD. See if we have anything in common, because I do know that we're looking at the markets in a very different way. So it'll be interesting to see what your views are on Euro NCD.
All right, I'll check it up. All right, so I'll start from scratch. And I wasn't paying attention to what you were saying, honestly, because I was, looking at gold as.
But that's good though, because then you're not influenced by my analysis.
Yeah, that's why I'm mentioning it. So I have no idea what you said. So I don't know if I'm going to go to the same direction. But that's exactly what you want to have. When you start analyze, you don't want to be biased by anyone else, right? You want to have your own idea of what could happen. So the first thing that I look, let me put my screen on. This is Euro NZD, which is the pair, right? Euro NZD, yeah. So so the first things that I look for are, well, I'm not going to analyze the market structure on the monthly. I'm just going to look for what is the most recent bullish and bearish order blocks, right? This one has been formed. Was it broken? Yes, it was invalidated, right? That's a sign to me, right? It didn't follow the script, as I was talking a little ago. So there is no bearish order block here. So it's breaking bearish ones. That's a bullish sign. Okay, so that's one. and it's coming back to a bullish order block. So that is actually a opportunity to me, right? So I think maybe it's going to reverse and continue higher. The other thing that I see here as well, that it broke, as in terms of market structure, it broke the previous pivotal swing point, right? So it, to me, that's, and it's coming from below, right? All these minor basic fundamental things tells me that on this time frame, in any case, it's likely to continue up, or at least that those are the signs that I read into the market. Another thing that I see here is, look at this. Oh, it did broke it there. I thought it didn't, but that's okay. All right, so I have that on the higher time frame. So I have a possible monthly setup. Okay, that means that if I get a signal, if I get a setup on the weekly and the daily and so on, I can actually hold for monthly targets. So that gets very interesting. Okay, so I go to the weekly. What do I see? I see a reversal pattern, bearish reversal pattern, or actually a bullish reversal pattern. Sorry. Yes, so we could be showing this. And in my case, I would be considering this, although I don't like the fact that the neckline is so high. But yes, I would consider that as the structural low that was broken. And because we do have this as the right, we do have this as the market structure, right? It's making, well, actually, that's not completely true, because that's lower than that, but it doesn't matter. I think here I do have enough. Actually, no, I don't. I have to be objective. That's not a neckline to me. So I do see. Okay, so yeah, this would be the yeah. Okay, so this is the established downtrend, and it breaks it by breaking that neckline. So that means that the neckline was there, and that means that my reversal already happened and the retest also already happened, meaning that my weekly that's my weekly neckline. Okay, the fact that this is the move that I would want, if I know this is the movement that I would want to have captured. The fact that it's coming all the way back is not something that makes that makes sense bullishly to me, right? Because I would go back when this forms, and when it breaks, I will go back and see what are the order blocks that it could have reacted from, and it did come to that order block. But okay, it didn't really give me it did come and move out of it, so that's nice, but that happened before the break. So yeah, okay, I think this does make sense because it happened after the break. Okay, so I do have an area of interest here. Other than that, I don't have anything else. We have bearish order blocks above us, and you can use these as targets, right? So as targets if you have a bullish setup, right, on the daily, let's say. So, but that's not the case yet. Let's go to the lower time frames, and I do see now I see a very clear bullish quasi, right? So I want to be, that's the downtrend, the established downtrend.
Could you please mark out that daily quasi you just marked out? Could you show where that is?
Sure. All right, so the quasi is this. We have an established downtrend. That would be like so. Actually, the highest point is here, and we have two, but I can choose either one of them. It doesn't matter. And we have like so. I don't have to have that many lower lows. Two is enough. That's the established downtrend, and then it moves out and breaks the neckline. So now next time it comes back, I'm going to be looking for entry order blocks below the 50% retracement. And if there are too many, that means that the structure is too big. Actually, to answer your point, like the simplest valid quasi for me is this. That's the neckline. It breaks out. And then it comes, well, it doesn't matter. And then comes back to to some structure in here. And the idea is, of course, that it's going to move out and either to one of these structures or to the top. Right, so that's the quasi that I see. Let's see if they are too many. If I see here, I see one, and since they're overlapping, that will be one, just one. That's another one, and it doesn't have any overlap. And we have 2, 3, 4, and even 5. So actually, to me, that's a reason not to take this quasi, right? I leave them on, that I can see there are too many. If there are too many, it tells me that the structure is a weekly structure, not a daily. So I'm not going to be, I don't have a valid daily setup here. However, it is a quasi. Just the entry are not valids to me. So in my way of looking things, I'm not going to be taking this, but I'm aware that there is a quasi here. So price might go up, but because there are too many order blocks, I'm not I don't find it to be selective enough for me to take the trade. However, it does it is a bullish structure with entries, although I'm not going to take them. Okay, so I have these, right? Since this is the one that I'm most interested in, since this one was squeezed, so apparently that wasn't strong enough. So I'm looking very interested anything it does from this point, even though it's not a daily signal, a valid anymore. Oh, I like that. Oh, I like that. Look at that reaction. I like that. I mean, that is follow through.
I like your reaction to seeing that. That's oh, that's good.
Yeah,
Like, oh.
look at that. Look at
yeah,
that.
we,
Order
we're
block.
traders. Like, we look at a candle, like, oh, that's a sexy candle right there. Yeah, go on.
So when I see this, right, I didn't have the information, right? All of these order blocks are formed by structures in this leg, has nothing to do with anything that happens afterwards, right? So what I want to see is, as the market is touching either one, and you can see, look at this reaction. That's not coincidence, right? See how price comes in with a lot of impulses, like a strong impulse to the downside. Look at this. As long as, look at that, comes back into that very narrow order block, shoots up. That's not coincidence. So that's the power of order blocks. So and to this one,
Can I
apparently it didn't
just
have.
say something there? You said like
Sure.
that's the power of order blocks, but can I just argue that it's also the power of support? Like
It is.
can I argue that it's
Sure.
also the power of a horizontal support level?
Oh, and the thing is that your horizontal support level may coincide with the order blocks, probably.
So
Right.
you're
So
saying that my horizontal levels are stronger if there's also an order block.
I don't know
Well, we
about
could,
that.
okay.
I
So I
haven't
think we
tested it.
can.
I can't say that. But
I
in
think we can agree
general,
on
yes,
something though. I think we can
yes.
agree on something, and that would be the fact that for you that makes sense. You know,
This makes sense
you
a lot to me. But the
yeah.
thing is, the same.
And
This is
you
the
know,
this is
it makes sense to me as well. It makes sense to me as well. I'm not
okay.
saying it doesn't make sense. I'm just saying like
This Yeah. Well, the
yeah,
same thing, the same driver that created the order block is probably the same driver that created your horizontal levels. It's the same
yeah.
thing. It's the
Because
buyers
when you
coming in at a specific
yeah,
place. So what either you have horizontal lines or levels or areas which may or may not coincide with my order blocks, but typically, what do you need for your horizontal levels? You need price to come and react to them, right? And what do I need for order blocks to be formed? Price needs to the buyers need to come in and overcome the sellers, forming a bullish engulfing. So it's basically the same thing. It's an influx of buyers coming in at a certain level. So it doesn't
Yeah.
surprise me. I haven't tested it, but it doesn't surprise me if your levels are basically the same or in the neighborhood of my structures as well. So
Yeah, because it kind of
when
makes sense. I mean, it's what creates a good horizontal level. I mean, a support level is obviously you have a downtrend or down move into that horizontal level, and then you get buying pressure, and that buying pressure is what creates the horizontal level. And it's quite obvious that because you have obviously a move to the downside and then a move to the upside, and the last down candle is going to be an order block. So where there is a
yes,
bounce, there is an order block. So I think they kind of go
yes,
go hand in hand. What I like about the order block, though, is the fact that it usually marks out. I guess it's just a preference. It's a way of scanning the markets, and you look for order blocks where I look for just liquidity or whatever, just the zones where price has reacted to. Um, Yeah, it's interesting.
yeah.
What I like about your way of you're looking at I'm only looking at the bottom and the top. I look at support at the very lows and then
Mhm,
resistance at the very highs. I look for two levels. Like what are the most obvious levels above and below current price? But when I look at your analysis, you have so many different order blocks all over the place. And
mhm.
I think what what I find interesting is how do you make sense of all of this where you have so many boxes at the same time? Like I would be a bit confused. Like how do you organize all of this? How do you know? Because you have like it says possible entry on the daily. If you go to the daily, it's like three or four different boxes that says possible entry on the daily. Are those still
Yes.
valid?
No, because the way to do that, if you don't have any rules and you go discretionary, then you might be trading all those structures, and I don't, because the
Yeah.
data tells me that I need to be selective. Order blocks, I've tested. I've gone with the 1 hour order block and traded all of them, and it's slightly has a slight positive expectancy, but it's not big. You need more things you need things to make it more selective. You can't just trade any order block all the time. It needs to go hand in hand using top down analysis, and you have to have other rules that you know move the probabilities in your favor. One of the rules that I use are, for example, this. That's a very useful rule, right? If I have a quasi, let me get it. If I have a daily order, if I have a quasi, which I indicated not long ago, that this to me is a quasi, right? So, right, without doing all the other swing highs, this is just one structural swing that was broken and it went higher, but let's just leave it at that. And if I have one, two, three, four, five, that's way beyond what I have a limit of possible entry order blocks that I can trade. If a structure has too many, it's very difficult for me to trade it because I know I have a low win rate. So I can be profitable if I'm going to be trading all of them, and just one out of those five is going to work, and not even all the time. So that's not good for me. If I this happens, then I'm not going to trade this. So I wouldn't be trading these structures, even though I say it says possible entry order block. But I know if there are five, I'm not going to be trading them. That's in other words, I have rules that guides me, that keeps me profitable, because the backtesting told me that what I'm supposed to be doing. So okay,
So
so
we've had a 4 hour candle close. Would it be okay if I just go through the because every 4 hours when I take a possible trade. So if it's okay with you, I can just go
okay, go
through
ahead.
go
Sure.
go through the candle close quickly. Look at the markets I'm seeing. So um, right, yeah, we had the close of the 4 hour candle. Now this is I wanted to show you guys this because this is just very frustrating, right? Because you have the perfect structure. This is the structure I'm looking for, but the 4 hour candle closed exactly on that resistance. You see right here, and this is one of the moments where I'm usually making my mistakes, okay? Because it's so close. Like if this candle would have closed up here, then I would have put in orders for this trade, you know? So it's a very small difference. And a lot of times the mistakes I do in trading, and I think a lot of you listening here can relate to this. What I do is I see this and there's a voice in the back of my head. I'm not hearing voices, but you know what I'm saying. There's someone, that it's that little person in my brain telling me like, but Jonathan, come on, it's just a couple of pips. It's just a couple of pips. You know it's gonna move to the upside. Like this is bullish price action. This is exactly what you want to see. And I'm like, yeah, you're right. It is. And then I place orders, and of course, price goes straight to my stop loss. I'm sure a lot of you been in that situation where it's like you're seeing something, and your first initial reaction is, nah, that's not the trade. And then you look at it once again and like, but wait a minute, it might be my trade. And then you start making up a scenario in your head where it's like, yeah, you're right, this is my trade. And then you take the trade, it hits stop loss, you go back to your journal, you read the journal, and you're like, what was I thinking? This how did I why did I take this trade where it's not according to my plan? And I think that's the difference between. I mean that's such a big problem in trading. But anyway, the 4 hour candle just closed, and I have to be very careful here because we have this level right here. This is a very, in my opinion, very clear level. We want to get above that level. I need to have a 4 hour thrust candle breaking through this level to really confirm a break of structure. We have the somewhat of a you have almost that break of structure on the 1 hour. Like you're peaking above that high, but you need to have a thrust candle which really goes above the level like that, and that would be my entry. So on this 4 hour candle, no trade on CAD JPY. I have to wait another 4 hour for a possible trade on CAD JPY. We can go to Euro NCD. Nothing here, but now you're seeing here that I see a lot of people in the comments saying they wanted to go long on Euro NCD. I did say that we have this resistance area right here, and as long as we can't get above this resistance area, I'm actually looking for a move lower. So still no trade on Euro NCD. And usually what I do is when we have a 4 hour candle close, so this is basically all the time I spend with trading. I do my plans on the weekends, and then I quickly just flick through the chart like this. I have one selected, and then I press the space bar. And sometimes if I feel like it, I go through the whole list. And it's very simple. I basically just look at the 4 hour candle close. Is there anything here that would confirm a possible trade? And if there isn't, and I don't really need to do this because I have my alert set, but sometimes I like to just go through it, see if I missed something. So if you want to short gold, I know a lot of people want us to take a look at gold, and we're going to look at that. And this is actually where this is the setup I would take on gold. So you have two different scenarios. Actually, I would say three different entry triggers or entry areas for gold. The first one, which is the lowest low pre-break, which is that one right there, and then you have that one, and then you have the immediate low pre-break, which is that one right there. All of these three is good entry areas for gold. Now, of course, this one is most likely going to get filled, and you'll be able to get a 1-to-1 risk to reward down to this level right there. And then, of course, if you enter up here, you'll have 1.44. But then you're risking not getting filled. I like to put my orders here because a lot of times I see that very low right here. So these are the things that I see when you have a 4 hour candle close that I wouldn't have seen otherwise. But then again, you have to understand that what are you going short? You're basically shorting this uptrend, okay? You're shorting this, and I think that makes zero sense. The only thing that makes sense is the break of structure on the 4 hour, and if you have a very isolated look at this, then yeah, that kind of makes sense. But then you look at the bigger picture. I mean, look at the weekly here on gold. It's almost like Bitcoin. I don't want to short that. But yeah, that just to give you guys an idea of whenever there's a 4 hour candle close, if I'm in my office, I quickly go through the screen like this. And if I'm not in the office, I have my laptop ready and go through everything. If I'm out I'm not at my laptop. I simply just go through these four ones right here on my phone. There's one thing I wanted to show actually. One trade I saw that looks interesting, and that is USD CAD. So do you see right here? I have an alert, and you see that's a good level because that's the last high pre-break, and you see a good strong thrust candle right there, and that's where I'm looking for a. If I would have seen this at the close of this candle, then I would immediately have put in my limit orders here, and then I would probably remove those limit orders when I saw a range forming here, because what I want to see is a fill on the next candle or the next after that one. But this is a possible trade that I'm watching on USD CAD, and I'm also just looking for a small move like this. But now, because of the fact that we've stayed up here for quite a long time, I will be looking for confirmation inside this area. So what I want to see now is I want to see this 4-hour candle coming in here, closing, another one opening, and then a third one like that, and I will then enter orders for that trade. There's different ways of trading, but there's like I have two different ways of entering a trade. Either put in orders right after the candle close, but if price stays too long up here, I want to have confirmation. So a good example could be, for example, we have CAD JPY. If this candle would have closed here, then I would put in limit orders here. But if the candle moved here and then you have price action like this, then I would wait for that move down and only enter on confirmation. Because what I'm seeing is you have momentum here. Okay, that's momentum. I want to get in on that momentum here and then ride that momentum to the upside. But now if we have this, then this is the move that I would want to be trading. That's the momentum move that I want to be in. Now that momentum is gone, we're coming down, testing that level, and I want to look for new momentum to get into. So momentum is very important. You want to make sure that you're with the move that is happening, right? It's those sort of things is very complicated to understand in the beginning. You kind of have to have experience with price action to understand what moves are driving moves and what moves are strong momentum moves. Okay, that's it for that one. Do we want to go back to Euro NCD? Look at that.
We have Lagarde speaking. She's already speaking for about 9 minutes, and the market EU is reacting very firmly or very strongly to it. So that's something we want to point out, right? The last couple of, do I have my screen on? Let me check.
Yeah, let's see.
That's my screen. You can see these are the 5-minute candles, and this is the start of this candle is when Lagarde started speaking, and it was on Forex Factory as a orange news event, so not high impact, not news restricted, but it can still see how it changed price action completely. And these fundamental things, right? News, macroeconomic news, number releases or speeches, policymakers speaking. They may change the market completely, right? Something might look very bullish, but if these numbers come out or someone says something unexpected, it can move in a very different way, in a very surprising way. And I think that's happening right now. As you can see, we were bullish, actually forming higher highs, bullish order block, bullish order flow. And actually, this is to me, this is even though it is caused probably by that speech by Lagarde, it is an entry order, not a bullish reason for me to look for an entry. As we said on I was going to go back to Euro NCD, and I will, but as I indicated before, on the higher time frames, the daily, the weekly, and the monthly, it's looking very bullish. So I want to be looking for on the H4 for reasons to get in, and I didn't have any so far, other than the signal that I had this morning. But now we do. We have a fresh order block, right? This order block that is being retested. That's the order block that was formed. It's an outside bar, not just an engulfing, and price is coming back into it. And I want to be looking for a reason on the lower time frame to see of a reversal. Right? Is the market reversing to continue its path to the upside, which is what market structure is telling us. If I have that and I go to the lower time frames, I do have an order block there on the 2 minute and the 2 hour. I'm sorry. Let's see that. We haven't reached that yet. That's the one there. So even though I have all kinds of structures, right? This one, for example, has already it was fresh when this candle. Let me make this bigger, and it may be a little confusing for a lot of viewers. See the let's see this one. This well, not that one. This one. See this order block? It was formed when we had that bullish engulfing. It moves out and comes back for an immediate, actually that one touched it, an immediate retest, and the move that I was expecting from it already happened. Right? That's the move that I want to be, I want to see. But that's already happened. Since it already happened, that order block, I leave it there, but it's not something I'm going to be trading anymore. Right? However, the order block that I just indicated here, created by that outside bar, hasn't been, well, it had a immediate retest, but that's a I can still trade it if it comes back as a fresh order block. It's being retested, because immediate retest don't invalidate or don't make is not a test that makes me not want to trade it. And the next time it comes to retest it, I will still consider this to be the first retest, even though it did have an immediate retest on that with that wick. So if price comes in here, I would be glad to take a long from. And it is very selective. It might not get there, right? But if it does get there, I want to be, and this is how far is this? This is only 5 pips. Make it 6. I'm indicating a 5.5 or 5.6 pip range where I want to be on the 1 minute getting my entries. It hasn't happened yet. And if we go to the lower time frames, I don't personally use the 15-minute, but I do see here a 50-minute order block, which I don't use, but I do like to see it, multiple time frames telling me, this area is price has reacted in the past favorably, right? So what I want to see is price making that, lower highs and lower lows, and as soon as it touches that area, right? And I know all these are all order blocks. I don't look at them. Only at these two, the order block, the H2 that's formed and is between the yellow horizontal lines. When it gets there, that's when I start stalking price action, right? Because as price is getting in, I want to see, do we have the expected response from this order block or not? If this is just continuing it doing its thing, then that's not what I expect from this order block. And if that's happening, that's fine. I don't want to participate because it's not something for me. However, if I do see something, let me get this out. If I do see something that I like, which would be a indication of a reversal where price no longer is doing this, it may even squeeze it. I don't mind that, as long as it doesn't close on the H2 and H4 below that lowest horizontal yellow line. If it does this and breaks structure, that's when my radar starts beeping and I say, okay, this is something I want to be part of, and I wait for price to come back and then move out. If it doesn't do the whole thing, I don't want to participate. So I'm going to be looking at many things that will not happen, but that's fine. So that's very interesting. And right now it is bouncing, but it hasn't reached my area yet. So I'm not going to participate. As simple as that. There's nothing. It doesn't excite me. It doesn't. I don't feel FOMO. It's just not my trade yet.
I wanted to talk about
Want to go
something
back to
here.
the
So we
Euro
have
NCD?
no, not on UNC. We have another question right here. So we have
Okay.
a interesting question here. So I would like to know how many sample size you tested the system. Negative risk reward is a slippery slope. You're using too much discretion for a mechanical system. Yeah, so negative risk reward is a slippery slope. I think what the whole idea with using negative risk reward is you have to be very careful, because if you too many losers will can create very bad results. It's the whole idea with having negative risk reward is to have a very high win rate, and because you have that high win rate, it means that you're not high. You don't have too many losers in a row. Okay, and if you have just too many losers in a row, you'll um, if you have too many losers in a row, the drawdown becomes too big, and it's going to be difficult to get out of that drawdown with a negative risk to reward. So you need to be very careful. You need to make sure that you're not making mental errors. And I gotta admit, I mean, I'm not 100% there yet. Where I'm still making some mistakes, and um, the effect of that is the system is not as profitable as it should be. But looking at um, the fact that I'm using discretion for mechanical system, it is quite mechanical. When I describe it, I can show you here, right? When I describe the trades I'm taking, you'll understand that it's actually quite mechanical. We can go back and we can look at CAD JPY as an example. So what I do is on the daily, I mark out what I believe to be high time frame levels, high time frame daily levels, and then I'll look for a 4-hour breakup structure at those levels. And 90% of the time, that is going to be a 4-hour double bottom. And if it's not a 4-hour double bottom, it's going to be a 1-hour double bottom like this one. But what happens is basically price comes down into a high time frame level, it forms a rounded bottom, or it has a bullish reaction. And I'm always, when there is a thrust candle breaking above this level like this, I always place limit orders on the last low pre-break with stops below the low of the structure, and for price to move up to 0.53R. So even though I'm trading this in a discretionary way, every setup looks the same. And that's the definition of a mechanical system. When you have a system where every setup looks exactly the same, it's a mechanical system. If I would be trading this completely discretionary, all my good trades would look very different. And now, when we talk about the numbers, I'll show you something here. It's the reason why I decided to go ahead with this, even though I don't have a very, very big sample size, is the fact that the sample size that I have and the numbers I have with that sample size is so incredibly good that I don't see a reason, to not trade this live. Now, I am doing backtesting quite a lot, and I won't really stop with the backtesting until I have 200 trades, because then I can be absolutely confident in the way this is going. But we can look at, like right now, we can look at the Edgewong journal last 30 trades. So we got 30 trades, about 31 trades, and that's at 75% win rate. So 31 trades at 75% win rate. Now, what's interesting is I can show you, I've started back testing last week, and I'll show you why I think this is insanely powerful. And I'll share that tab right there. Okay, so this is the backtesting template. What we're looking at right here is I've started testing. Now, this is only on Euro USD, USD JPY, and GBP USD. Well, we got 38 trades. This is over the course of 2024. We got 38 trades, and we're at 86, almost 87% win rate. Much higher, of course, than live data, and that's what you're going to get, right? What's interesting here, though, is that USD JPY had no losers throughout all of 2024. and GBP JPY or GBP USD, one loser throughout the whole year of 2024. When I see this, I mean, when I get to the number 200, if the win rate is even close to 87%, and when I have multiple pairs not losing in a whole year, that to me is just incredible. Like, I've never had such high numbers ever in backtesting. So yeah, I mean, it's too good to be true, but you have the numbers right here. And I usually I don't talk about my YouTube channel on The5ers, but I do this live. Like, I do the backtesting live. So you know exactly, which trades I'm taking, everything. And I can do that on this live stream as well. It's 100 completely, transparent. It's just crazy, the numbers that I'm getting with the system. And all I'm doing is I'm going long at high time frame support. I'm going short at high time frame resistance. It's so incredibly simple. And what's crazy is that the less indicators I use and the less drawing tools I use, like the more profitable it becomes. It's just insane. All I do is look at the high time frame levels and then look for a 4-hour breakup structure. That's it. That's everything I do. Yeah, I do agree that it's a low number. It's a low number, but yeah, when this gets to 200, I mean, we're looking at right here, we're looking at 38, which is nothing, right? But when that number gets to 200, and maybe we have above 70% win rate, I can be 100% confident in this system. And the fact is, we're probably going to be looking at multiple years. And what's cool about this backtesting template, which is available for everyone watching this as well, you can go to the The5ers YouTube channel. You can just search for backtesting, and you'll find the live stream that we did, me and Victor, where we talk about this. And you'll also have the link to the backtesting template. What we can see after having all of these 200 trades is we can see which time session is going to be most profitable. So we can see here, for example, the Tokyo session is least profitable, still 78% win rate. But the thing is, I'm actually looking for the outliners here. So for example, Euro USD has the worst statistics out of the 3 tested. So Euro USD has, like, I think 69% win rate. And if I'm going to be honest, that's a bit too low. I don't want 69% in backtesting. I want above 70, maybe 75. So if that pattern continues, I'm just going to remove Euro USD from my list of tradable assets, which might sound weird because it's 69. But if you're getting 69% win rate on one pair and 85 on all the others, it's better to just remove the ones that are not as good as the rest. We can look at things like we can look at what's the best, what's the average R. We can look at what week of the year has the best risk to reward ratio, what month of the year. You can see in June, for example, I'm not profitable. So June is I didn't find any trades throughout all of July, and June is the only month that is not profitable. If I test, for example, 5 years, and every year I'm not profitable in June, well, guess what? I'm on vacation for the whole of June, because I'm not making money trading that. And then I can look at the days of the week. On Monday, no trades on Monday for 3 pairs through all of 2024. No trades throughout whole Monday, which is just crazy. But these are the statistics where you can really do a deep dive into your system. And very you can see right here, for example, USD JPY is the most profitable pair, and the idea here is to find the outlier. So if your USD is continuing to outperform, well, then that's removed from my weekly trade planning. So yeah, it's I'm not doing this just because I found something and I want to try it out. There's a lot of testing, there's a lot of statistics going on here in the background, and yeah, it's you shouldn't be trading anything if you're not putting in this type of work and really looking at the statistics of your trading. And by the way, guys, for those asking for the giveaway code, it's right here. It's GMB768. It's on the screen right now.
For a short while.
Yeah, but that's yeah, Victor. Are you doing
No, you
any?
said you said something very very key. I think you said you're not putting actual money at risk unless you have done the work, and
Yeah,
that's the key part. Um, you have to put in the work. In trading, I firmly believe so. If you're not doing the work, it's not going to produce anything. You're probably just going to be part of the 95% of the traders who are not making it, and that's sad, but it's the truth. It's hard, but it's the truth.
yeah, definitely. I wanted to ask what. Yeah, what did I want to ask? Yeah, I wanted to ask you if how are you maintaining your your trading system? How are you working on that edge? Because I know every trader that I'm talking to, they're always talking about the fact that they're like you can never relax. Like you always have to think about your edge. You always have to think about what if I become unprofitable? What if my edge stop working? Because there's been a lot of instances where you've had traders trading for 10 years, and then all of a sudden the system that they're using is just not delivering the results that they're used to. So how are you working on that and making sure that you're keeping up to date on your edge?
I measure my pure signal alongside my actual performance, right? So the trades that I take that are I measure, of course, automatically. Nowadays we have all those automated uploading journals. You can, in any case, you can know the traits that you're actually taking. That's very easy. Whatever journal you're using, that's going to be all the traits you have. But I'm actually identifying, tagging, literally one by one, which ones are part of the plan and which aren't. Right. That's one thing that I'm doing. So those are the I'm trying to see how many times do I deviate from the plan and taking trades that I shouldn't be taking because it didn't satisfy the trade plan, but by some reason I still took it. That's one thing. And the other thing is, I ask myself, from the time window that I have to trade every day, right? How many trades, how many signals were there, and I measure them, right? Even if I didn't take them. So I have three performances. One is the strategy's performance, regardless if I took the trades or not. My trades that I did take, right, that did include only the strategy as the signal, valid signals, and everything I took, right? And to give me to know and to do what you're saying is to service my to maintain and to optimize my strategy. I need to be focusing on the first one, not what I did with or without extra trades that aren't part of the plan, but what is the system doing. Regardless of what I did, even if I'm on vacation, I need to know what the system did while I wasn't trading, because that's the system that I'm going to be following going forward. So I want to know the statistics of it, not only my back tested statistics, right? How what it did in 2023, or the 6 first months of 2024. I want to know what it's doing right now, and that's how I monitor the performance, because the best predictor of future behavior or performance in this case is past behavior, but the more recent it is, the more relevant it is. How is it performing right now in current market condition? So, and if I see it deviate from the statistic that I have in the past, then I need to know that in time, and you know look at my data to see if there's anything that I can do to spot the loser. Are the loser coming on more often? Why? Is it something specific that I can pinpoint that is you know triggering my system to take trades that are now more likely to be losers than even though that didn't show in the past? If I can find that, then I can adjust my system and make it profitable again. Do the whole thing again. Do my back testing, and then test on a. You have to do testing on a different data set, right? If the rule that if you have created, you've thought up a rule to eliminate losers or to add winners, whichever way is just fine. Both of them have the same effect on your bottom line, and that rule is based on the data set that it was analyzed, right? And you need to test that on a new set of a new completely new, so a different period altogether. And if you have the same results or similar results in the past, then I can use them. That gives a good confidence. That tells me it's robust. The rule is robust and it's likely to perform well in the future. So to keep it short, it's by analyzing the system, not my performance necessarily, and to see if it's deviating from what is to be expected based on my backtested data that I have and based on the trades that I took, which are pure signals. We need to make that. If you don't measure these things, there's no way you're going to know these things in advance, right?
Yeah. So what
Knowing
I
is
yeah, I mean, I
measuring.
think that's super important. What I usually do is so there's first I use a similar process where I think about over trading. So I'll look at my system and I ask myself how many signals am I getting from the system, and then anything anything above that in live trading would be over trading. But I also do the same thing after trading. I look at how many which signals did the system give me, and how many of those signals did I catch. I think that's also very important, and you also have to have a room for error, like a margin for error. You have to, how many of how many trades are you missing? And I'm trying to figure out a number for that, to quantify that when I'm doing back testing. How much less is my win rate with live trading compared to back testing, and how many fewer trades am I getting in live trading compared to back testing? I think that understanding that number is very important when back testing as well. So that's something I'm trying to figure out now. I think in back testing versus live trading, what I've seen is my win rate is about 10% lower in live trading. And in a lot of cases, I'm getting, 50% lower number of trades, because almost half of all the signals is missed because of the fact that it happens outside my trading session, or I'm just not available to trade. So basically what I do is, like, I can cut the profitability in terms of risk to reward in half, and remove 10% of the win rate, and then ask myself, would I still be profitable? If I'm not profitable, then that could be problematic. Also, one quick note on the video audition review. I've had some technical issues with that, so I'm not able to show the videos on the live stream, and I need to prepare that for tomorrow. So we'll do all of that tomorrow instead. So all the video auditions, me and Victor, we will go through them and look at them tomorrow, because I'm not able to set that up in a way that's working for the live stream with sounds and everything. So we'll do that. We'll do all of that tomorrow. I wanted to also show you guys this. Remember how this is a big part of the way I'm trading. You see this candle right here? That's, I've talked about that thrust candle. I'm not sure if you guys watching are familiar with a trader called Tom Dante, Trader Dante. He's been trading for a long time. He's also doing trading education, and he has a course or a series called Edges for Ledges. And in there, he talks a lot about um, thrust candles. So, what is a thrust candle? Well, a thrust candle is a candle that prints below the level, goes through the level, and then closes well above the level. This is a clean breakout candle or a thrust candle. And whenever you have a move like this, naturally, you're going to have a level, which is the last high pre-break. Now, this is not I didn't come up with these ideas, right? but I trade based on them, and it's just different ways, different names for the same thing across many different trading systems. But when you have a breakout, naturally you're going to have a last high pre-break, which is that one right there. You also have something called the immediate high pre-break, which is that one right there, which is the very last wick prior to the breakout, which is that one right there. And then you have the last high pre-break, which is this one right there. Now what you see is when you have a level like this, it becomes a naked level or a clean level because it hasn't been tested. It's been tested as resistance, but it has never been tested as support after the breakout. Usually what you have when you have a clean level like this is price will react to this level. Yeah, I'm catching a cold. I can feel all throughout the live stream my voice is just disappearing more and more. But yeah, you have a clean level here, and a lot of times when you have a clean level, you'll see price react to it very nicely. And it's still a clean level, even though you have this range above here. It's still a clean level, and a lot of times you can have a entry order right on that level, and you'll see that you have a very good reaction to this level. So we can go down to the 15 minute, or you know what? Let's go all the way back down to the 5 minute, and we'll look for a reaction at that level. And you see right here, it comes down, very good reaction to the breakout level, and where we had that last high pre-break. So that's the whole principle that I'm trading based on. The only difference is I will not keep my orders here if price does not hit it in the next two candles. So if this level has not been hit in the next two candles, I'll remove the orders and then wait for confirmation. This means I will be missing out on a lot of good trades, because a lot of trades, they come hit that naked level and then continue to the upside. But it's that momentum move that I want to see. I want to see thrust candle and then hit that level and continue to this area. So this level right here is actually the area where I want to TP. And that price has already reacted to my FTA, or the first trouble area, which tells me that I need better confirmation for another push to the upside. How did you draw a horizontal level that snaps to the highest close? Oh yeah, I basically, you have a tool in TradingView called the magnet, so you can have a weak magnet and a strong magnet. But what I do is I can move it around, and then when you hold down Control, it's going to snap. So whenever I press the Control key, it's going to snap to the closest wick or the closest candle. Very useful. It's the same when I draw a level. What?
How do you do that? I didn't know that. How do you do that?
So you see this magnet right there.
Yes.
You see that it's flashing right now. It's flashing blue.
Okay.
So whenever I press the Control key, the magnet gets activated. So you can see if I have this activated as a weak magnet, and I have this activated now, right? When I move this around here, it's not going to snap to anything. But if I move close to a wick, it snaps to that wick. And if I move it to the candle, it snaps to the candle. And you can also have a strong magnet, which means it's going to snap to the closest wick or body wherever you are on the chart. I recommend using the weak magnet, because then you can move it around more freely. So you go in and you select the weak.
But it only works with your horizontal lines. Okay.
It works with everything, every drawing tool.
No.
You can use this one, for example. It works with this. It works with this. It works with this one.
Yeah. I understand. The only thing is my horizontal lines are actually, trend lines that I put horizontal, and with those it doesn't work the same way. But it's a great tool, man. Great tool. I didn't know
horizontals. What do you mean, trend lines that you put horizontally? Why?
Look, I will.
Yeah. You got to show that. That sounds like you're taking a detour.
Now look, I put the magnet as strong, right? And I go with the horizontal levels, and I put one here, and I grab it, and of course I see what you mean. It automatically goes to the high, as you said. But the thing is, I don't use horizontal lines. What I do is I take trend lines and I make them horizontal.
But
And if I
why?
use this, I don't know if that's
Why, why
always
don't
the
why
way.
don't you
That's
use the ray tool? Do you know about the ray?
Yes, but the thing is, I don't want this to be indefinite. And this line sometimes needs to be, a couple of bars, and sometimes I want it longer. So I want to be in control how long this is. The ray will be all the way longer, then it'll cause me to have many lines, which may or may not be as relevant anymore. So I use the trend line to for horizontal lines, and when I use that, of course, it doesn't do anything. But it does do if I take the one side, and as you can see, of course, it picks. But that's so it's making the one side at the top, or the close, or the open. But that it's great. That's I just learned something I didn't know. Great stuff.
Okay, yeah, that makes sense. Okay, so you can't do that with. You're right. You can't do that with. You want to know? You want to how do you put your trend lines horizontal?
I when I mark that like this, let's say I have a line, or better yet, if I don't have a line yet, I have the tool activated. I go see the cursor automatically. I have a weak magnet on. Automatically, it will go where I want it to have it. Let's say I want to mark
Okay,
this
do you want do
top.
you want do you want me to do you want me to show you a secret?
I, no, I know how to do it horizontal
Okay.
automatically with the shift. You mean,
How?
right?
Ah, yeah.
Well,
Okay, okay. You did. You
yeah, yeah.
you did know it.
I
Okay.
Yeah, I know how to do that, but I didn't know how you did it. That it flipped, it maintained horizontally a horizontal line that flips to the high all the time. But I can only
Yeah.
do that yeah. But so I click on it, and of course it's not gonna be perfect. And I just I press, shift, and it makes it horizontal. For everyone who doesn't know, that's how I do it. And I need this all the time for my market structure break. So it's very useful, but it's only important for me until it breaks it. Once it's broken, I don't need to have it as a ray that goes all the way to infinity, because it's not relevant anymore. I only need to see if it's broken or not. And that's why I use a trend line made horizontal.
All right. I'm going to do the giveaway. You guys are ready? Today we got one account giveaway today. So everyone who's this is a good question. I think let me cover this quickly. So I think the first thing is if if you don't know how to use if you don't have a specific reason why you want to organize the object tree, then you're probably not needed. But the way I do is every trade that I've taken, I move to one specific folder, and that folder is called trades. But for me, it's quite important because when I'm doing my weekly trade journal review, I want my chart to look like this. Because it's going to be clean. And then I press trades here. And then all my previous trades are going to show up. So I can look at all my previous trades and go through them and review them. But then when I'm doing my weekly market scan, I remove all the trades and start. So that's really the only. But I've seen some people have the most crazy organized object tree with folders for all the different drawings. Like everything's just amazingly organized. But I'm honestly like I'm a very disorganized person, privately, which it's not really my thing. If my fiance would be trading those, she would have like a million different folders and no entries anywhere. So super organized, waiting for the right trade, just planning everything in detail. Well, I'm the complete opposite. I no planning, just take whatever trades appearing. No planning whatsoever when it comes to that. Okay. Do you plan that in any way? Do you use um the object tree,
Mm,
like plan your drawings in a way?
I used to organize them in time frames. So what I would do is have my monthly, but I stopped doing that a long time ago. I would have like monthly structures that I can toggle on and off, weekly structures on and off, and they so I can, because the problem that wanted to solve was that if I have all the time frames on, I will lose track of what I'm looking at. It will be too much. So I would have the tree object tree open, and I will toggle, as I said, toggle them on and off depending on different time frames. But I stopped doing that. What I do now is I make the object, the visibility of the object. I decide what time frame it needs to be visible on. So the monthly, I don't need that on the minutes, not even on the hour. I don't need to see that. So I keep the monthly only to be visible for the weekly, the daily, and of course the monthly, and so on. So that's how I organize. But I like it. I like it. That's a feature of TradingView that I like a lot, where you can organize them, you can pack them together, you can lock them, you can make them invisible. So you can have, let's say, you have different strategies that you're trading at the same time. Although I say, simplicity is best and you should be focusing on, but let's say hypothetically you are trading two different strategies and they have different objects. They need different object on your chart, so you can group them by strategy, and you toggle, you switch one off while you're dealing with one strategy, and you switch back. I think that's very powerful. You can use one chart for that.
Okay, guys, I'm gonna put a timer on for 2 minutes, and then I'm gonna be. Give me a second. This is the winner of the account today. Now, what you need to do is you need to confirm your email to be able to win. So you need to go in, you need to comment, and you need to confirm your email. And I want the last part. Yeah, basically confirm your email. You don't want to you don't need to write out the whole email, but you need to confirm the email somehow. Perhaps the first, yeah, I want the first 4 letters of the email. If you're watching this, congratulations to. Yeah, I'm not gonna try. I'm not gonna try. Let's just say N cube. I think N cube is better. Okay, we have the winner right here. Congratulations! Congrats! You're getting you guys are really getting the hang of this. It's easier and easier with every giveaway now, and I
Yes.
think it's a really good way of doing this to get rid of the scammers and get rid of everyone who's entering with fake emails and everything. So yeah, beautiful. Congratulations, man! You're the winner of today's giveaway. You will get an email from me with a link to be able to access your discount. You'll get a 10K bootcamp evaluation account is what I'm trying to say. So there we have it. That's our winner for today's giveaway. And I'm gonna see if what happened with the last week's winner. I'm gonna get an update on that from the team. Make sure that everyone has get their email and everything. All right. I think that's it for today's live stream. I need to
Yeah, I like.
go drink some tea with honey.
I since Wednesday, I did have flu-like symptoms, so I know exactly what you're feeling.
Yeah, it sucks. Sucks. Especially when you're here talking for 2 hours. It's I mean, I do love this though. It's fun. It's fun to do these live streams. I obviously wouldn't do them if it weren't fun. But yeah, it's look at that breakout here in CAD JPY. It's when you have moves like this, it's probably going to hit that TP. It's moves like this that really creates the ideas of entering too early. All right, guys. Thank you for joining us here today. We're gonna be doing all the video submissions for the All for One challenge. We're going to be doing that tomorrow, and then we're going to be doing some more live trading tomorrow and looking at updating you on the positions. And on Wednesday, we're going to have Raul from Edgewonk. We're going to be talking about trade journaling. We're going to show you some secrets and tips to journal more effectively. Maybe there's going to be a Edgewonk giveaway as well. I can't promise anything, but maybe we'll have something like that. So that's going to be very interesting. I think no, actually tomorrow we're going to talk about system development. I'm going to be walking you through what I'm testing and what I'm looking for to create a system, starting with entry trigger and then looking at stop loss placement, a TP, and like working with different take profit strategies and things like that. So tomorrow's going to be a very interesting webinar live stream as well. So yeah, lots of stuff going on this week. So I'm looking forward to that, and hopefully you'll come on here tomorrow and join us as well.
Yes, indeed. I think referring back to the giveaways, I think there was indeed a learning curve, but it's working very, very nice now. I like it, and that verification phase or measure we put in, I enjoyed it. And as far as our show tomorrow, yes, I invite everyone to keep working at your edge. And one of the things you can do is to come regularly to our show, ask the questions that you're having, issues you're dealing with, because we're here to help you. We're here to make sure that you move on to your next phase as a trader. Make use of it. It's free, right? Come on these shows, ask us these questions, and we love it. We love it when you come with those great questions that make us explain things that we didn't even thought about explaining before. And it's all possible because of your participation, your engagement, and that's what we want. So I invite you all to join us tomorrow again for some great show. Thank you for being here. Bye.
Thank you, guys. See you all tomorrow. Bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other